Emerging economics and cryptocurrency regulations, a comparative analysis of a legislative approach in Serbia, Romania, Hungary, Croatia, Albania, Ukraine, Bulgaria, and Moldova. The advent of cryptocurrencies has brought about a significant transformations in the global financial system, which presents both regulatory challenges and opportunities. In Europe, the various national approaches to cryptocurrency regulations demonstrate the complexity of this field. This paper aims to analyze the different approach of European countries towards regulating laws concerning cryptocurrencies. Methodology: cryptocurrency regulation in Eastern Europe and the Balkans represent a diverse and constantly changing landscape. Our research aims to provide a comprehensive understanding of this regional complexity by analyzing and comparing the regulations of different countries, including Croatia, Serbia, Hungary, Romania, Moldova, Albania, and Bulgaria. Using a comparative method, the research will identify common trends and key differences in national legislation, evaluating policies, tax regulations, and the supervisory approach. The qualitative analysis will estimate the impact of these regulations on innovation and financial security, as well as their social and economic impact, such as the influence on the adoption of cryptocurrency. In Croatia, Directive 108 from 2017 introduced for the first time in Croatian legislations the definitions of virtual currency, digital assets, and digital wallet, informing individuals and the legal entities about their obligations regarding the preventions for money laundering and terrorism. The capital gains from the previous years after deducting capital losses are subjected to a tax rate of 12%. Residents of Zagreb are subject to a tax to 18%. Before paying taxes, individual must register in the tax papers register declaring income from abroad. Additional mining in Croatia is taxed at the rate of 24%. In Serbia, cryptocurrency regulation represent a major subject of interest in the country's financial and technology landscape. With a progressive and open approach to technological innovation, Serbia has attempted to create a clear and favorable legal frameworks for cryptocurrency and blockchain technology. This initiative underscores the country's desire to position itself as an important regional hub for digital technology and innovative finance. In 2021, Serbia made a significant step in the direction with the adoption of the digital assets law, marking an important moment in the official regulations of cryptocurrency and digital assets within its territory. The law aims not only to clarify the legal status of cryptocurrency and digital tokens, but also establish a framework for their operations and transactions, as well as for innovations protection. Among the key elements of the digital assets law are the regulatory of the issuance and trading of digital assets, including cryptocurrency, and the establishment of specific requirements for providers of services related to digital assets. This includes the obligation to obtain a license from the supervisory authorities. In Albania, in 2020, Albania made a significant step by adopting the law of virtual financial assets, marking one of the first legislative initiatives in the region dedicated exclusively to cryptocurrency. This law aims to establish regulatory frameworks for the issues and market of virtual asset investor protection, as well as the prevention of money laundering and terrorist financing. Through these regulations, Albania intends to create a safe and transparent environment for cryptocurrency trading, attracting investments and innovations in the financial technology sector. The law requires all providers of services related to virtual assets, including cryptocurrency changes and digital wallets, to obtain license to comply with strict knows your customer and anti-money laundering regulations. Ukraine, currently there are not detailed procedures for calculating taxes on crypto assets. Law on virtual assets 2074 from 2022 refers to legal entities that are subject to a corporate profit tax of 18%, while individuals are subject to an income tax of 80% plus a military tax of 1.5%. The law proposed a specific rate of 6.5% for gains for the sale of virtual currency for individuals and allow of the carryover of losses. Companies may deduct mining expenses under certain conditions, while individuals can only deduct cash purchase expenses. In Bulgaria, according to the non-binding guidelines of Bulgarian tax authorities, cryptocurrency are considered financial assets for tax purposes. Therefore, the taxable capital gain obtained by a physical person resident in Bulgaria from the sale, exchange, or the other transfers of financial assets in the sum of the profit made in the respective year minus the losses suffering in the same year. As a general rule, the taxable capital gain from the sale of cryptocurrency by individual investors is subject to personal income tax in Bulgaria at a fixed rate of 10%. However, if the activity is carried out systematically and constitutes the main source of income for the individual investors, the profit obtained from transactions are taxed at business income and fixed rate of 15%. Hungary profits from trade and mining are subject to a uniform personal income tax rate of 15%, such that costs related to activities, mining machine, electric bills, or fees paid to a stock exchanges can be deducted from profit. In Republica Moldova, Moldova prohibits the provision of service related to cryptocurrency. This measure impacts both legal entities and individuals, explicitly prohibiting activities such as cryptocurrency to fiat currency exchanges, cryptocurrency transfers, and participations in any financial services related to them. As a result, a broad spectrum of operations conducted by cryptocurrency platform becomes unauthorized. In Romania does not have a specific rate for capital gain taxation. Instead, individual investors pay a 10% tax of any gain made from cryptocurrency. If the gain obtained from a single transaction in less than 200 lei, there is no requirement to declare or pay tax on this transaction. However, this only applies if your total gains in a financial year do not exceed 600 lei. If the total profit obtained from alternative sources, including investment in the cryptocurrency, extend to 12 times the gross minimum wage in the country, then we'll also have to pay social insurance contribution. This is kept at 10% of the taxable income. In general, losses in Romania are tax deductible, meaning that you can offset them against your capital gains to reduce your total tax obligations in a particular financial year. Result in the Eastern European and Balkan region, the approach to cryptocurrency and their regulation varies significantly among the different countries, with each adopting specific policies in accordance with their own assessment of the risks and opportunities presented by their emerging technology. A comparative analysis of the situations in countries such as Croatia, Hungary, Bulgaria, Romania, Moldova, Ukraine, Serbia, and Albania reveal both similarities and a notable difference in terms of cryptocurrency regulations and taxations. All the mentioned countries recognize the need of address concern related to money laundering and terrorist financing in the context of cryptocurrency use. In this regard, most have initiated or are in the process of developing legislations to integrate digital assets transactions into the existing legal framework to prevent these risks. For instance, both Croatia and Romania have made steps in this direction, demonstrating a cautious approach to the crypto phenomenon. A major difference between these countries lies in the stage each is in the process of regulating and taxing cryptocurrency. Serbia, for example, has already implemented a tax regime for digital assets, while Albania is pretending to introduce taxes or income generated from crypto assets starting in 2023. In contrast, Hungary and Bulgaria have emphasized the risk associated with cryptocurrency without yet establishing a clear framework for their taxation. A distinct feature of legislation proceeding in Albania is the clarifications of the treatment of cryptocurrency mining activities, setting it apart from other countries where mining may remain in a legally undefined area. Additionally, the income tax rate applied to cryptocurrency gains varies. Serbia imposes at 50% tax on capital gains, while Albania proposes a preferential rate of 6.5% for gains obtained by individuals from the sale of virtual currency. The Republic of Moldova has adopted restrictive states, completely banning the provision of cryptocurrency-related service from July 2023. This radical decision may indicate serious concerns about financial stability and the risk associated with money laundering, reflecting extreme caution in the face of technology considered potentially destabilizing. Conclusion: based on the comparative analysis of the approaches of different countries in Eastern Europe and Balkans, through the regulations of transaction of cryptocurrency, several significant conclusions can be drawn that reflect the diversity and complexity of the legislative landscape in this emerging field. Firstly, it's clear that the majority of countries recognize the need to regulate the cryptocurrency market to prevent money laundering and terrorist financing. In this regard, both the legislative changes proposed in Croatia, Romania, and Republic of Moldova, and the warning issued by the central banks in Hungary and Bulgaria underline the security concern about underpin regulatory initiative. A second important conclusion is that there is a variety of approaches regarding the stage of implementation of cryptocurrency legislation. Serbia and Albania are examples of countries that have made significant progress in establishment a tax framework for crypto assets, while other states are still assessing the risk and potential regulatory strategies. A notable difference between the approach of analyzing countries in the treatment of cryptocurrency mining activity and legislatively in the respect, with Albania providing a specific definitions and tax framework for these activities, unlike the other jurisdictions where the status of mining remains less clear. Thank you so much.